Hey, Open Trades! I want to do a video analysis update of just one stock. I kind of want to do an experimental video because I was looking at my straddle and strangle screens and my unusual option screens that I'm going to be looking at, for the rest of my life, just because, business is pleasure and, I love what I do. And I noticed that Bit Digital had an interesting, setup. It correlates to some stocks that I tend to talk about frequently. And so if you guys like this kind of style of video, focusing on one stock, just let me know. You guys know how to let me know. Like, comment, all that. Subscribe. I know I used to not say that, but hey, gotta compete. I'll tell you what, man, content creating, that's a different beast than, insurance debt and inflation. Anyway, Bit Digital, BT on the straddle screen. This screen is the free screen. It only shows the next 60 days worth of readings, but seeing it down here with the 3-strike straddle bot, this is one of my preferred screens to show the institutions are taking long game of positions in a stock. A long game of position is when a long call and a long put are paired together. Usually it can also be when shares of common stock are paired with an option. That is most usually done in a married put. A married put is when usually a at the money put is bought, and then based on the delta of that put, that equivalent amount of shares is bought. In my opinion, it tends to work best with a stock that pays dividends because those shares are going to be held. But sometimes I've seen how MMs could use married puts. Anyway, the whole point of this use married puts on to accumulate stocks and prepare for big moves in stocks that are more volatile and don't pay dividends. But the whole point of this video is really just to focus on one stock that I saw on a screen. So I'm going to try to do that. Really, the only notes that I have were from before in my own notes. I was measuring this ABC correction. And so I think that BT has a pretty clean count. I also think this is just kind of a good opportunity to show some wave principles, and it's really important to remember that wave principles are principles. Elliott wave theory is just Elliott wave theory. I know at times it can look, like it's magic or it's math, but the truth is, it is just another form of technical analysis, and that's why I also like to look at these option screens to know how the institutions are hedging. The way I see it, Elliott wave, is kind of just one piece of the equation, and then the option screen is kind of showing me the hand. I almost view it like, if I was playing Texas Hold'em with someone, but I could see their cards, right? Their cards were on a public options chain that I could see. That's almost how I view it. And so much of poker is keeping your poker face, making sure your opponent can't see your cards. But in this case, the MM's cards are very clear. They're right on these option screens, and a lot of people think that institutions have big advantages over retail, and retail doesn't have any advantages at all. The truth is, one advantage retail does have is that for me, if I wanted to make something a big allocation in my portfolio, it would not take much more than 2 or 3 days of moving money. And if I wanted to contribute or move a substantial portion of my wealth even into something, might take a couple months, right, at most. Institutions, it's not like that. Accumulation campaigns can take quite a long time. So when straddles are being bought at the very end of these long ranges, that's sometimes how I like to know they're getting ready for this, whatever campaign it is. Maybe it's not going to go exactly as I say. That's statistically what's supposed to happen. I know recent statistics and everyone looks like a genius in a bull market, statistics would suggest otherwise. But I do think that this three strike straddle is pretty clear evidence. MMs are getting ready for a big move in Bit Digital, and I also think that they're using these straddles to end an accumulation campaign. So I'm going to give Elliott Wave evidence for that. And remember, the whole purpose of them having a straddle is that they do not have to stop out the way retail would tend to. The way retail talks about stopping out on FinTwit, these option screens and the public information on these option chains show that's not really how they do it. They are using options to hedge their downside, and one of their favorites is the long game of position, the straddle. So if, let's say, 50 delta call was bought, it has a delta of positive 50, and a negative 50 delta put is bought, that's called a delta neutral position. And let's suppose that the delta of that straddle, it's zero when it's bought at $3 for Bit Digital, and let's say there's no skew. A skew is when the calls or the puts are going to have a bias towards the volatility. That's just a fancy way of saying one side is going to have more expensive premiums, and therefore it's also going to have a lower delta because the Vega is being priced in, and that's going to kind of force the delta down. That's usually more relevant with dividend stocks. Anyway, little off topic. But Bit Digital, let's assume there's no skew at all, and the delta of this trade right now is 50-50, and notice it's right at $3. It's right at $3. That's one thing a lot of people do get right, I think, is when they talk about these big psychological numbers. And then really, it's all about liquidity. These are the big liquid numbers. So they're buying this three strike straddle, and it's delta neutral. Now, if Bit Digital falls, what could they do? Well, what they could do is, if the straddle is bought delta neutral at 3, let's say that going down $1, let's say it went all the way down $1. So the put would have a delta of, say, negative 80. Or let's do negative 85. Deep in the money put. Right? So the put has a delta of negative 85. Let's say it has a delta of negative 85 at 2. And the call delta is going to fall to 15. So now the total delta of this straddle is negative 70. So that means if this MM is trying to accumulate Bit Digital, whereas most of retail is going to stop out at this low, and they're going to stop out at this low, and they're definitely going to stop out at these lows, this MM is going to have a deep in the money put delta straddle, negative 70 delta. That's a bearish position. Originally, this MM could have profited very quickly just as much from an explosive move. If Bit Digital had started to explode, then the call delta is very quickly $3.50, $4, gonna wipe out that put delta, and that's 100. That's a delta 1 per contract long. That's a long position, right? That's a good amount of exposure. But unlike where a retail trader is buying commons and they're stopping out here and they're stopping out here, I'm definitely not saying that this is one way is better to do it or not. I'm saying that there's evidence, there's proof that institutions use these types of positions. I'm just explaining after, how I've watched these screens for years. This is kind of I use variations of this strategy with an ETF called the Metaverse ETF, where I have straddles on that ETF, and then when that ETF falls, there's many ETFs and top holdings of that ETF that have high correlations. The ETF falls a little more because it's high beta. It's got those metaverse growth stocks, and then I buy some of my favorite tech-related market components, even just direct holdings of that ETF against those bloated puts, right? So whereas, that's what this, there's a price for everything. There's nothing free, right? And so that's why, the MMs all doing it at once suggests, what's the price? Well, what's the price of all this is the Bit Digital, the market knows it's pretty volatile. So it has to have a pretty substantial move for this to work out, unless it's just part of an accumulation campaign. And as soon as these options are exercised, it's going to run off. So anyway, I'm not Nostradamus, and I don't, just because I can see and speculate what their, positions are doing, that doesn't mean I'm going to be right. But what this is, the price of all this, is that if Bit Digital just stays sideways and this isn't part of an accumulation campaign, then the premiums are the price. But if the MMs are smart money and they do know that Bit Digital is going to have a big move, they're benefiting with this straddle, because even if the big move is to the downside, they can offset it and buy all those shares from retail while they stop out. Anyway, now let's just get to the technical analysis of Bit Digital. So I thought this was an ABC correction. What I was measuring here, just to show, for this ABC correction over here, I'm just going to move the numbers so it can be visible. I was measuring ABC, and I was taking the Fibonacci extensions of this to show that this ABC correction ended between the 100 to 161.8% extension of the length of wave A placed at the wave B low. I think it did. Yes. Anyway, the whole count, and for a real volatile stock, if it stops 5 seconds past the 161.8% extension, that's where I tend to remind myself it's only a wave. And also, these are high beta stocks. They can, have deeper wave 4 corrections. Wave 2 corrections tend to go past the 78.6% retracement, and wave 3s and wave 5s, a la, some of these semiconductor plays we've seen and some of these crypto plays we've seen can be quite extended. It's not, we haven't heard wave theorists talk about extension in quite a while on FinTwit, but that's why extension is the reason that smart wave theorists are warned, prepare for the counter trend moves and, push the impulses with the position. Anyway, with the bias. The bias is to the impulse, and then whenever the counter trend, 5 waves is the impulse. The bias is to the impulse. Whenever the counter trend is back, the 3 waves, A, B, C, it's not always back. It can be a counter trend to the upside too during the bear market. The rule is to prepare for the counter trend rally and then push the impulse, so to speak, with the bias, if that makes sense. And that's all Elliott Wave voodoo, by the way. If I push that bias too hard and go on leverage and get some credit cards out, and I get a call from American Express and my broker, that's not pushing the impulse or the bias. That's pushing the credit limits on, the financial system. Anyway, I heard a funny story, man. I don't know if I should share it. A FinTwitter and a crypto Twitter user who I actually have had a interaction with, just one. I don't even know if they responded. They were like a pretty big time account during the crypto, one of the, I don't think it was the NFT craze. That's why I didn't want to talk about it, because I don't really know, and that's not really the whole point of this video. But someone who I've, even interacted with on FinTwit and crypto Twitter, they were in a news article because they lost $440,000 trading cryptocurrency, and they now live on credit card debt, allegedly. This is like a news article that I saw. Um, it's you might know who it is if I just kind of say what I remember the title of the news article being is crypto astrologer, 24-year-old crypto astrologer loses $440,000 and now lives on credit card debt. That's the oh man. So I don't ever, things happen to people and stuff like that, but I was thinking about that today. That's the difference between technical analysis and risk management. If I bought a bunch of Digital on credit, and I realistically looking at this, this subdivision's going to be a little ugly. So I'll actually just focus on this. The subdivision of this, I'd have to go zoom in onto the daily count, and it's really not relevant to this. I think this is a 1, 2, 3, 4, 5 waves. Leading diagonal, 1, 2, 3, 4, 5. It's really difficult to see that 4, and it just wouldn't really look good, and it would kind of be a waste of time because that is not a relevant invalidation. Whereas these levels down here on the daily are. So this is what I think is the longer term cycle. Again, it's not the most important thing for the invalidation, but it's important to remember that one of these lows I'm going to list is the weekly invalidation. But on the bigger time frames, these MMs are buying straddles. So if Digital does spill out, even if it spilled out so bad, one day it had a reverse stock split, they have an in the money put. And that in the money put has unlimited downside exposure. And they can offset that until the delta hits negative 100 by buying common stock. So that's called a long gamma position. Anyway, that was the big picture of the chart. I just need to get rid of these. And we'll focus on this weekly. This weekly is pretty nice. And I think it's just a good educational weekly, Or it's a daily chart. It's a daily candles, but weekly time frame, just because that's where the subdivision's good. Yeah, I'll make this black, but I think that this is a pretty good example of an impulse. 1, 2, 1, 2, and then look at this RSI. I think this RSI 78.25. 79.52 is the wave 1 high on the subdivision on the RSI. 79.52. Did we break it? We didn't break it on this. But I do think that this impulse is very clean. So not everything is going to be perfect, but I think this is a pretty clean 5 waves subdivision. And from the Elliott wave principle standpoint, sometimes these cryptocurrencies and these crypto plays and some of the growth plays where their value really is being driven by speculation and algorithmic activity, I tend to think they have the prettiest counts sometimes. And I think a lot of people have noticed this, but this is a good example of wave 5 being roughly the length of wave 1. And this is even a good example of what the proportions of an impulse tend to look like. So anyway, I'll probably just end up going gaga over the Digital count and it gets invalidated, but wave 1, ABC wave 2, $1.95. I was gonna make sure 1.95 is that low. And then, so this is kind of the larger degree, right? So there's degrees in Elliott wave theory. This is the hard part for people to grasp. There's degrees in Elliott wave theory. There's technically 9. Realistically, on the daily, the weekly, and monthly chart, only 3 or 4 degrees are going to be relevant. And to be honest, the super small degrees, the 1 month time frame, the 5-day time frame, those are for the Discord salesman. Very rarely do I find myself looking at a 1 month, or 30-minute candle time frame. When I do, I tend to close the laptop for a little bit. You know what I mean? Anyway, 1, I'm trying to say, you know what I mean, less. I really am. But doing these videos live, it helps me find what I'm about to say next. So, you know what I mean. I'm trying to cut down on that, but you know what I mean. I'm like Butters from that South Park episode where he becomes a pimp. Anyway. Yeah, even this smaller degree count looks good. And I'll give a few more things about Bit Digital, then wrap it up. Realistically, you guys know that my Bitcoin and crypto analysis is holistic. There's a lot more that goes into it than this. But this was a good example of seeing something on a straddle and strangle screen, and it really was something that was relevant to my analysis. So a little cute with the colors, but I enjoyed making this video. I really did. And so if you guys like this video, like it, subscribe, comment, let me know, because these are the type of videos that I would love to, be making because they affect my analysis. And I was gonna do this charting anyway. As far as correlations go, like I said, there's a lot of stuff. But Wolf. Oh, by the way, did I even give the levels? Anyway, yeah. Rule number one is don't forget the whole point of doing the wave count. 1.95 is the super wide invalidation, which is why it's a ridiculously wide invalidation. And that's why it's important to talk about their long game of position. This is too wide. 1.95 is just from a degree standpoint. From a degree standpoint, 1, 2, 3, 4, 5 waves up, large wave 1. ABC correction, large wave 2. So that wave 2 has ended as long as BTBT is above 1.95. So that's the largest, widest invalidation. From that low, 1, 2, 3, 4, 5 waves up, and an A, B, C correction. The purist might point out that when I label this ABC correction, I'm going to label it here. It might be a little more correct for me to put it up here. It doesn't really make a difference. Because the whole purpose is to have the meaningful invalidation. So this is where the invalidations are meaningful. Because it's long term, the way most retail amateurs play it, the way they talk about it on FinSwit, which I'm not saying is a bad idea. I'm not saying it's a good idea. I'm not giving investment advice at all. This is just what I do. They're talking about buying common stock, right? And having a stop loss at the meaningful invalidation. Well, the meaningful invalidation is 1.95. That's the most meaningful invalidation. So already we can see how the institution is at an advantage having this long gamma position where if retail, 1.95, that would be a big loss to take from 3. And then the MM is just going to buy all those shares right from you, and you're going to watch it go the other way. And you obviously is this hypothetical, non-existent, retail trader, an amateur gambler. Anyway, the MM, what they're doing is that they're buying a long gamma position because they're expecting Bit Digital is going to have a explosive move, and they're probably using these long gamma positions to hedge commons and stuff like that. But the more meaningful invalidation from an Elliott wave perspective, and the most useful one, is from this low. The widest invalidation, or the second widest invalidation, is 2.27. 2.27. That would say that this blue wave 2 is ended. The third and really the most useful invalidation is that from this low, a small wave 1 and a small wave 2 has developed. So the real invalidation is 2.55. So I'm going to have SL1 for stop loss 1. And the invalidation I'll label as 2.27. Now for the targets, what can, I didn't even say the target because the target, might be a little clear. The target I'm going to find, there's a few ways that I can find it. One way is to measure these fibs. The 78.6% retracement just kind of shows that 5.27. It just shows that this wave 2 was deep enough to correct the cycle. So the 161.8% extension of this large wave 1, I think, is a very useful wave 3 target. That's very high, and that's very far. For very volatile things, it's possible. The equal legs target is found by taking the length of wave 1 and placing it at wave 2. So this is a little wide of a box, but again, high beta, high beta, wide boxes. That would be what I would say is the full setup. And even right now, it looks like Bit Digital it looks like it's rallied a little bit from its morning dip. We'll see. Another way to do it that some people like is to take the 161.8% extension by getting those fib tools. Starting here, click and hold, go up to wave 1, release, drag down to the bottom of wave 2, release. That is going to give roughly it's very similar to, right? So there's kind of a fib confluence zone, 5.61 minimum target, and then up towards 6.51 towards the low 7 range, getting a little extended possibly for wave 3. But again, on the larger degree counts, it could just be a bumpy ride to some further stuff. As far as correlations go, I've talked about TeraWolf, very kind of similar follow the leader ideas in this sector. TeraWolf's firming up a little well. It's exploded about 150, 200, percent. And Coinbase, this is the second or third time Coinbase has had an explosive move. Look at this perfectly untouched chart. So this is the type of work that's on my page. And if you like videos like this, subscribe, and let me know in the comments. Thank you.